When it comes to sustainable investments, the UK and Europe seem to lead the way, but Canada is doing its own work to catch up. Gordon Power is owner and CIO at Earth Capital. And of course, we know this is a hot area for across the world, has been for a few years now. In your space, you do something that's a little bit different. Tell me about the Earth dividend principle, how you apply this to figuring out what makes a good sustainable investment.
Yes, thank you for inviting me. Well, the Earth dividend is a selection of questions we ask every investment we make. 30 questions where you answer positively, neutrally or negatively. And those questions cover the areas of natural resources, pollution, corporate governance, etc. So they go wider than ESG. And to enable us to make an investment, we have to have a positive score. That means that we can then go ahead with a normal due diligence and make our investment. The Earth dividend is then used for us to continue to monitor the company, assuming that it must improve itself in terms of its sustainability during its ownership. Now, the reason we do that is because we think those businesses sell for more price when they are more sustainable. So
just to kind of crudely describe what you're talking about here, you could take a company that is polluting, but the Earth dividend model would show that it plans to pollute less.
Correct.
And yep. that will create efficiencies and returns. That's a good investment model.
Let me give you an example.
Okay.
We've invested in a new toilet that uses 1.5 litres of water rather than 9 to 12, which is the normal flush rate. That particular business makes its products from ceramics and some plastics. Those are negative items. So what we've done is come up with a plan where that company will change those things during its process so as to become more sustainable.
And how many companies do you own? What's the kind of target?
Currently, we have about 18 in our existing portfolio, ranging across all manner of types of sustainability, from creating renewable energy through to technologies like the toilet.
And is there a target number that's the right amount for the portfolio?
Yeah, well, for the size of the fund that we're talking about, which is about $800 million, we'll have around about 50 investments.
And how hard are they to find? This is, as I say, a popular space now.
Well, I've been building Earth Capital across the world over the past 10 years. And so we have investment managers in every country at which we are going to make investment. Therefore, we've already been in those countries for considerable amounts of time. And what usually comes with that is proprietary deal flow, knowing where to come from, relationships with universities, other investment managers. I'm here, funnily enough, in Canada this period to talk to people about joining our happy band of investment managers, because there's some great technologies here in Canada to exploit internationally.
Is there a way for an investor to tell if sort of sustainable or ESG fund is like another? In other words, is there kind of a good housekeeping seal that says it's not just calling itself sustainable, it actually meets these criteria?
Yeah, I mean, I think the principles of responsible investing matter in terms of across them, and we actually belong to that organisation. But it's actually about your process and system, how you compute sustainability the way we do with Earth Dividend, and it's operating in such a way that's sustainable. Different to ESG in a sense that we are impact investors. And what we're seeking to do is make better returns. Our belief in sustainability, that's the case. Our returns over 30 odd years is 28% investing globally across all sorts. But from sustainability in a smaller portfolio, it's 45%. Which proves that, for us, it proves the fact that to be sustainable is better.
And in terms of your exit strategy on these investments, how do you know when the right time, when the maximum return has been achieved?
I think that's about really working with management in the underlying businesses, and when those businesses are ready, it's really quite obvious that that's the time for everybody to exit. And it's an interesting process. You start across the table opposite each other when you're negotiating initially, and the whole purpose is to get to the same side of the table to enable to do that with the buyer.
Great to have you here for this. Appreciate it.
Well, thank you.
Gordon Power is owner and CIO of Earth Capital.